Okay, I think we'll go ahead and get started. Oh, can you guys hear an echo? No, okay, it's gone. Okay, hi, my name is Lexi. I'm with QuantConnect's PR team. Welcome everybody to whether it's good morning, good afternoon, good evening, wherever you may be joining us from. Welcome. If this is your first meetup, we get together every last Thursday of the month and just discuss any strategies you may be working on or research that you want to share. The structure that we usually follow with these is that a few people will present at the beginning. Today we have actually two members of QuantConnect that will be sharing with us today, Colton and Derek. They're very knowledgeable, and we will be opening up for some questions at the end that you may have for them. And then we'll just have a nice discussion after that, and people are more than welcome to share theirs after that, or however you guys would like to do that. So I'll go ahead and let Colton get started. Colton, are you ready to present?
Yeah, I'm good to go.
Okay, awesome. I'll let you take the ring then.
Hey guys, you know what? I'll go ahead and turn on my video too and start sharing my screen. For today's presentation, I was asked to give a little tutorial on using our research Docker container. For those of you that are familiar with the research environment on the web UI, you can use it to go ahead and analyze data from our data sets. It's a useful tool for all quants. I think it's a good place to start before you work on any algorithm, just to test your ideas. So let's go ahead and get started here. All right, you guys can see my screen, correct?
Yep, we can see it.
Awesome. So I went ahead and wrote in some easy instructions just to kind of give a baseline for people to follow. Let's see if I can copy that over here. So it's actually really straightforward. The first step really is just to get Docker installed. A lot of people might be familiar with it. If you're not, it's really straightforward. Follow the documentation for Docker and it will get you through. In my case, I already have it installed for Windows, but again, this is super useful. It's actually a great tool to use. Go ahead and follow the link. So once you have Docker installed, the next step is to go ahead and download the repo. The reason we want to do this instead of just getting the script is because it actually contains data that you'll be able to use in your research environment. That's the nice part about having the open source access to that data. If you have more data, go ahead and copy that over into that repo or wherever you're going to use it. Now, I'm not going to make you guys wait and watch me clone the repo, but I'll give a little example just as if I did it right here. Oops. So I actually already cloned it in here, but just to make the tutorial full, I will copy my little command over. Now, in your case, you'll probably have to wait for 5 to 10 minutes. It depends. I noticed that it's a little bit slow, but that's GitHub for you. So next, you're going to move on to launching the script for your specific environment. In the Lean repo, you're going to go to Lean Research. For Mac and Linux-based systems, you're going to use the bash script. For Windows, go ahead and run the batch. I'm on Windows, so I will show you what that looks like. I just realized I still had it open, so let's pretend that didn't happen. From fresh, go ahead and run that script. It's going to ask you for a couple parameters. For all intents and purposes, just go with the defaults. For tutorial, it's really easy. Just hit enter. Now, after getting those parameters for you and updating the Docker image, it'll go ahead and spin up that container and connect it to it automatically for you in your default browser. Now, those of you that aren't familiar with Docker, on Windows, it comes to the dashboard. You can see that we have the container running our lean research. If you are on Linux or even in Windows as well, you can give commands like docker ps to make sure that container is running if it didn't work for you, but it should. Now, when you're here, for new container, it'll actually be completely empty. I can actually delete this and make sure we can see that from scratch. Now, for those of you that don't have any experience with Jupyter, it's actually an incredibly useful tool for all development, but this container is specifically built for Lean. Again, you could use it for other things, but I'll just show you a quick example of creating a notebook in your desired language. I do both Python and C#, but it's incredibly easy to use. Let's start with the classic Hello World. Well, that's interesting. Excuse me, guys. Normally that works. Of course, when I get in front of the presentation, it will fail on me, but that's just how it goes sometimes. We'll just go ahead and try and create another one. Sorry about that, guys. Yeah, let me, we'll just skip over this part. For all intents and purposes, that should work completely fine from scratch, just to open up a new notebook and get it started. What I really want to show you is the examples that we have to work with Lean in a notebook environment. We have a couple that are included in the repo. The two that I prefer and that I've worked on myself are the kitchen sink C# quant book template and kitchen sink quant book template, both Python notebooks, but this one actually runs on the C# kernel. So if you are a C# user, make sure you grab this one. If you're a Python user, grab this one. I'm gonna go ahead and grab the Python one. Oh, also another important note, when you start this container, it will create a directory for you, this notebooks container. This is shared between the container and your local machine. So anything you put in here will be reflected here, and it will be really nice. Let me pull that back open. So as you can see, my example came across. Again, this is probably the best one to get the basics down. While you are trying to use this, I always recommend checking out the README that we included in the research repo. All right, well, this notebook would like to work for me. So maybe there was just something wrong with my hello world that I can't find, but that's okay. Now, when you start this environment the very first time, your config will actually not contain the information to directly connect to the web API. I would show you, but I don't want to give away my API token or user ID. But again, in the README, it's covered exactly how to do that. Let's see. in the using the web API from the notebook. Basically, you're going to click on this config, open with editor, and then enter your user ID and API key in this fashion described right here. Now I have one backed up, so I'm going to move that over there while you guys can't see it. All right, now that I have transferred over my config that contains my API key and user ID, I'm expecting the API to be connected initially on kernel start. This is really nice because it'll allow you to retrieve your backtests from the website, interact with your projects you have there, launch backtest, anything the API can do, you can do from this interface. We see that it is connected. Great. An example of it pulling my projects down. It'll pull all of them. I have plenty of test projects from all the tests I run on a daily basis, but there are ways to select the projects, pull them out, pull their backtest down. I'm not going to cover that in this tutorial exactly, but please reference the API documentation, and there's plenty of information on how to do that. Now, one of the best features about the research is our QuantBook object. It allows you to interact with Lean through the same interface that our algorithms use. So all the language will be the exact same, except for you will just preface it with the object QB. In this case, you saw in the top line, I actually created that QuantBook. Name it whatever you like, just make sure that's the interface you are talking through. So when I go ahead and add my equities, my Forex, my crypto, I can just do it straight to the QuantBook. Now, just like the algorithm interface, we have our history calls. With Python, the reason I like it so much is that it allows it to be easily plotted. So I'm going to make my history request for my keys, the SPY, Euro, and dollar, and the Bitcoin USD. Now, the only downside about using the research environment in the Docker container, again, is the data. I don't have access to all the data that the online cloud does, and that's what's so nice about our platform. But in the container, I do have the open source data. So as you can see from 2019 to 2020, I actually have the daily SPY data, but after that, it just flattens out.
Colton, somebody had asked about running it on a Mac.
Oh yeah, sorry about that. I totally missed that. The Mac, yes. If you install Docker, just the same tutorial they show on their documentation page, the bash script will work perfectly for you. I think we have some users that actually reported some bugs on Mac that I recently fixed, so I know that it does work.
Anybody have any other questions for Colton?
So there's a ton of examples here that you can reference and see how it works. I think the #1 resource for everyone is to take a look at this example first, and then please take a look at the research documentation. Anything on our website about that is applicable to this container environment, all on your local machine. And I think that's all that I have for you guys today.
Thanks, Colton. If anybody has a question, feel free to just ask away. Colton's very knowledgeable in this field, obviously, so he has a plethora of information if you want to know more.
And I do see a question from Rob about preparing local data. So with the repo, you do get the data that's included. It by default, when you run those scripts, you saw that I stepped through the questions. Let me roll that back so we can go slowly over that.
Actually, no, that would have been it.
Oh, I was so stupid there. I think stupid move. Make me pay for it. Yeah.
So in this question, the enter absolute path to data folder, you can actually change what folder contains the data. But by default, it's using the data that's included in the repo.
After like 5 years of having Spotify, to finally make a dump playlist of all my favorite albums.
Oh,
can you guys just make sure to mute your microphones if you're talking at the same time?
Sounded like an accident, I'm gonna assume.
Yeah, it's all good. It's all good. I use Spotify too.
Yes, don't we all? By default, it will use the data included in the repo. If you have any extra data downloaded, go ahead and place it in that same data folder or reference your data folder wherever you keep it. Just make sure that it fits the lean converted data. And then I see a question, how to prepare the fundamental data locally as you did. It's just the same as the data for equities, options. Just include it in the folder that's being mounted, and Lean will do the rest of the work for you. There is some functions regarding the fundamental data. I think if you look at some of our examples, there is a version of calling get fundamental and looking at that information. I could actually pull it back open and look at it if you'd like, Rob, but no worries either way. No problem. All right, with that, I think if there's any more questions, go ahead. If not, I'm gonna let Derek take the reins here.
Okay, so I'm just going to jump in. It doesn't look like there's any more questions. If there are any more questions, feel free to add them to the chat and we will come back to them at the very end. But here, let me show my screen. Can you guys see that?
Yep, we can see it.
Okay, perfect. Okay, so my name's Derek Melchin. I've been an intern at QuantConnect for 7 months now. Today I'm going to show you the latest strategy that I've added to the strategy library. It was actually just published today, so after this, feel free to go look at the actual write-up. But just a quick overview. What we do in this strategy is we train Gaussian Naïve Bayes classifiers to forecast the upcoming daily returns of the largest stocks in the technology sector, given the historical returns of the sector. So I'm just going to do a little bit of background on Bayes' theorem. This YouTube video, which I took a few screenshots from, does a really good job of visualizing what's going on. In their example, they have a set of 210 people. 10 of them we're going to classify as librarians, and 200 of them will classify as farmers. So we have 2 classes. Then we pick a property. For example, let's say the person likes soda or does not like soda. We can then see that 40% of the librarians like soda, while 10% of farmers like soda. The thing to note here is that the number of farmers on the bottom that likes soda is actually greater than the number of librarians that like soda. But the proportion or the likelihood for librarians is greater than that of farmers. Now that we know the likelihood of the property for each class, we can classify new people as either a librarian or a farmer based on if they like soda or not. And that's kind of the heart of Bayes' theorem. So if you see on the far right here, this function is calculating the probability of the class given the evidence. So the probability that a person is a librarian given the fact that they like soda. The way that we would classify a new person either as a librarian or a farmer is we just figure out which class has the higher value for this function. Now, the traditional naive Bayes uses Boolean properties, so liking soda and not liking soda. But the properties that we want to use in this strategy are continuous, namely the historical daily returns of stocks in the technology sector. Since we're using continuous data, we can't use the traditional naive Bayes framework. We need an extension, which is the Gaussian Naïve Bayes model. The way this works, well, this is a different example. Again, another YouTube video that visualizes the process. I recommend going to look at those for sure. But we have two classes of people, as you can see on the left. People that love the movie called Troll 2 and people that do not love the movie Troll 2. Now, every one of these people, they have three properties in this data set, namely the amount of popcorn, soda pop, and candy that they consume. So what we do is for each of these classes, and for each of the properties in each class, we fit a Gaussian distribution to each feature. So we can see on the far right that we have a graph for popcorn, soda pop, and candy, and on each graph we have two distributions, one for each class. Now, when a new person comes along, we can classify them in either of the two groups as loving the movie or not loving the movie, based on the values of the properties that they give us. So they give us the amount of candy they consume, soda pop, and popcorn, and we plug all of those into the distributions for each class. Now, we're going to get an output for each of the distributions, and we simply sum them up to get the score for that class. So we can see for this new person, the score that they received for the first class of loving the movie is negative 124. We then do the same thing with the same person for the other class, for the three properties, candy, soda pop, and popcorn. And we sum up the results and find that the score for this class is negative 48. Now that we know that the class does not love Troll 2 has a higher score than the other class, we classify this new person as most likely not loving the movie Troll 2 based on the information they gave us. So that's just kind of how Gaussian Naïve Bayes works. When we transition this over to a trading application, instead of using the properties of how much candy and popcorn they eat, we're going to use the last 4 daily returns for each stock in the universe. So that's, the universe is consisting of the largest technology stocks based on market cap. And instead of 2 classes of loving the movie or not loving the movie, we have 3 classes as either having a positive, negative, or flat return for the next trading day. So now I'm going to step through the method of how we actually implement this in QuantConnect. We first start with the universe selection model, and we implement a custom one to return the 10 largest technology stocks. We also set up a alpha model that we call the Gaussian Naïve Bayes alpha model. This is the model that's predicting the direction of the future return from the given day's open to the next day's open. So every time a new security is added or removed from our universe, this method onSecurities_changed is called. When this method is called, we create an object called symbol data for each of the securities in the universe. And we also set a flag for if the universe has been changed. That's what the new securities property is at the bottom. The reason we're setting this flag is because we want to train the Gaussian Naïve Bayes models every time that the universe is actually changed. Oh, sorry, I think I skipped a slide there. So this is the right one. So this is the symbol data class. This is used to store training data for each of the individual securities in the universe. And here is the constructor. In the constructor, we set up a consolidator to update our features and labels with each new day that passes. In the constructor, we make a history call to get historical data so that we have data to fit the models right at the beginning of trading. At the very bottom, we're looping through the history data frame that we've created, and we're calling a method to update the features, and then we're updating the labels with the future returns. Here is the definition of the update features method. Again, it's called to update our training features with the latest data passed to the algorithm. This is essentially just building a larger data frame. Now on to training. The models are trained each day that the universe is changed. By default, it uses 100 samples, and each sample includes the 4 last historical daily returns for each security in the universe. And again, the labels are the returns from the open to the next open. So in this method, we loop through all of the symbol data objects that we have, and we are concatenating them into a large data frames that we have all of the features in one place. And then we loop through all of the symbol datas again and fit a Gaussian Naïve Bayes model to each of the securities. So this is the update method. So as new trade bars are provided, this is the method that's called. We collect the latest open to close return for each security in the universe. We then predict the direction of each security using its corresponding Naïve Bayes model. Once we have the direction, we can then emit an insight for 1 day holding period. Following the alpha streams criteria, we utilize the insight weighted portfolio construction model and the immediate execution model. And after all of that, we finally get to the results. I was quite surprised by the way this one worked out. Over the past 5-year backtest, it actually outperformed the S&P 500 in terms of the Sharpe ratio and the variance of daily returns. Interestingly, it also outperformed during the 2020 crash, but not during the recovery. It had poorer performance in the S&P 500. So some areas of further research. Again, all of this code is going to be in the strategy library. It's already live, so you can go and play around with the code. Here's some things that you might want to look into. Just adjusting some parameters in the symbol data class, trying other features and labels for the model that we're training, adjusting the universe parameters, maybe trying a different sector instead of technology stocks. The current implementation doesn't have any handlers for corporate actions, so that's something that could be added. And lastly, we could filter for stocks with independent and normal returns. This is actually an underlying assumption of the Bayes theorem. There are tests for this, but we leave those out simply because the research papers, the references that I include here, they didn't actually do any tests for those, so I didn't do any in this algorithm. But you are encouraged to do that if you want to do some more work on this strategy. But yeah, that is it. Thank you very much for listening. I'll be happy to take any questions. Thanks, guys. I'm glad you liked it. have you played around with the hyperparameters for naive Bayes? Can you just clarify what you mean by that? I imagine it's probably got something to do with the distribution parameters. If that's the case, no, I didn't change that. I just used the standard parameter tuning. I mean, it's parameters inherit to naive Bayes function. Oh yeah, I didn't tune any of those. I just left it as is, straight out of the box. But yeah, by all means, if you want to, you know, dig into that, let me know how it goes for sure. Yeah, I was really impressed with the return. This is actually the first strategy I've added to the library that actually outperformed the S&P 500 benchmark. So that was very exciting. So the next machine learning model, we don't actually have a plan for that yet. The next strategy that I'm building right now does not use any machine learning. But I'm always on the lookout for new research papers. So if you find something that's really interesting that uses machine learning, you know, let me know for sure. There are some examples of neural networks in the strategy library if you want to take a look at those.
Anybody have any last questions for Derek? All right. Well, we are all in Slack. You can message Derek in Slack. That's his name up on the screen. You can find him on Slack that way, and Colton as well. But thank you so much, Derek, for presenting. That was awesome. Now is kind of the portion of our discussion where it's kind of open mic at this point. Does anybody have anything they would like to present, anything that they're working on, or even if you just want to talk about a strategy? Or we can kind of transition into, maybe we can introduce yourselves if you feel comfortable doing so. The purpose of these meetups is to kind of build this community that we have going here. I'm sure a few of you have either been to one before or you plan on coming to future meetups. Does anybody want to share where they started in trading, or how, you know, how you started on this journey in quantitative finance?
Hey everybody, my name is Chak. Can you guys hear me?
Yeah, we can hear you.
Okay, so I started trading basically around June, late June. I never had experience actually trading before, but my background is in programming and data science. So, you know, before actually going to programming, I'd figured that the best way to learn is through pain. And and what better way of learning than to use actual money in the stock market? But I have built something pretty cool so far, and I'd like to contribute to the open source library soon. So yeah, I don't have any real trading experience, but through some of my work, it's definitely applicable to some of the concepts that I've learned and picked up along the way in the past 2 months.
Tell us about what you built, Jeff.
So I built an ensemble. It's a lot of customized ensemble indicator signals. So it just uses indicators to just buy and sell based off of the heartbeat of benchmarks of indices. So I just use SPY for now, but I'm thinking of creating something customized for the NDX. And then I've also created, consolidated index, like ensemble indicators, a combination of MACD, RSI, Arun, and a couple of other things where if they're all green, then, you buy. And so right now I built something that focuses on both long-term strategy and it also does intraday trading. From 2010 to now, it has a 3,600% return rate. But I'm still trying to poke around with it to try to get it working the way that I want to before I actually use machine learning.
Nice. So you were saying that you use like a composition of indicators together, like to make your decisions?
Yeah.
I was
So
looking
like
at something similar like that too.
Yeah, so like I've only started building this model I think about a month and a half ago, and I think it's just because of my experience in coding. I'm a little bit more patient with debugging. But yeah, like you use different resolutions and indicators, and if they're all green on all different levels, then you buy. That's one thing that I learned when actually day trading and then losing money while day trading. So
All been
definitely
there.
something. Huh? I mean, I'm totally serious. Like, it's the only way to really learn. Like, I only picked this up in June. Like, I actually got into trading June, and then actually coding. Like I stumbled across QuantConnect and Lean. I think 2 months ago. I just called. Yeah, I just called, and then Jared just picked up. And then we just started talking.
It's awesome. I have
but I hope to
similar
contribute
story.
something machine learning related. Oh, what's that? Sorry.
Oh, I was gonna say that I found them while I was college, or a senior in college, and I looked at the platform, and I was a day trader or trying to be a day trader at the time, and it was going well. And then with the whole February COVID crash, I was really done with just the day trading approach. I was like, I can't do this anymore. Like this was not as fun.
Yeah.
And then I ended up reaching out, and that's actually, I saw that they were hiring somebody, so that's how I got started here.
Yeah, I mean, I hope to I think at the very least, I just want to contribute. I mentioned this to Jared. I think being able to just leave something behind and then having other people like work on it and then push it further, I think it's satisfactory. And and like, why not? Like, if this is a pretty good lifelong project anyway. But regarding the February crash, I was tinkering around with a manual with like really hack and slash coding, and I found that if you just focus on like really overvalued stocks using the fine filtering, so like peg over 2, stuff like that, it actually performs. You actually profit over the Corona crash. It's really weird.
Interesting.
It doesn't make any sense, but it does. Yeah,
Well,
I don't know,
that
but
crash was a weird one anyway. I mean, like, I don't even really still know what happened. So at this point, if there's something that won over the course of that, it's an anomaly because it's so it
right.
was such an interesting event.
Right. I mean, the idea is that, like, I mean, I'm just forcing myself to just do this manually first because I actually want to get a feel of the indicators and how they work and how the information in different resolution actually has an impact in the signals that are created for buying and selling. Like, that matters a lot. And so, like, I found that up until the crash, if you just sort, with like volume ratio, over time, if there's increased volume, then that's a really good indicator for just going along. Up until the Corona crash, where it's just dollar volume is okay. Dollar volume and overvalued stocks. It's weird. Yeah, I don't know. The Corona crash is weird.
Yeah, it was a crazy time. But I'm glad after all this you're trying out with QuantConnect, and it sounds like you got a lot to do. And like you said, the contributing part is kind of the funnest. I mean, even if I didn't work under QuantConnect, the reason I was so interested and drawn to it, and the reason I ended up getting a job there, was because I found it so cool to be able to work in an environment that was open source like this. And I think that's really what we're trying to do. Our mission is to create that foundation to build off of for all algorithmic traders that want to go forward, like leave something behind that can be built on by everybody.
I definitely agree. I mean, especially with I think there, with I think there was like in the last few years, like, one of the companies, they just stopped supporting it, and I personally don't know why. I mean, there is just a lot of value that companies like QuantConnect and these types of products can bring to to the market and to the economy.
Right.
Oh, I actually do have a question. Where's the strategy library?
You have to go to the documentation and then tutorials section.
Oh, okay.
Or you can also just Google strategy library QuantConnect and it will take you there.
That's how I get there.
Yeah, me too.
Got it. Thank you so much.
You're welcome. Yeah, there's tons of them in there. You can spend multiple days looking through all that code.
Oh yeah, I did look through a bunch of these. Yeah, they're pretty good.
Which one has been your favorite so far?
I like pure momentum and volatility. I mean, just for now, there's a bunch of other things that I want to put in, but I don't want to just randomly just put stuff up.
Right. I did post in the chat here. There are some guidelines that you can follow to get things merged into the GitHub repo if you want to contribute that way. You can also just post in the community forums if you're just looking for help or something like that.
Okay, got it. Yeah, thank you so much. Yeah, there's a bunch of things that I do want to contribute. I want to create an alpha model. like I just want to beat the high score right now.
Don't we all?
Yeah.
It was interesting hearing you speak about your kind of style check. One thing you might want to think of too is not taking such a binary approach. You said that if everything's green, you buy. So with strategy development, you can kind of take the day trading mentality, like just where you buy or sell, or you're in or you're out. But then also there's the other side, which is kind of more of a portfolio management mentality, which is more of the sort of classic hedge funds approach, where they have gray areas and they have percentages of their portfolio in the market at different times. And so there's no one right way, but it might be helpful for just learning development to see both sides of it.
Got it. Thank you. Yeah, like I think like because I have I just focused on mean reversion, and then I, as like as one of the core components within the model that I was able to build around it. So I think because of that, like I didn't have to really think about the portfolio management as much, because I just keep seeing it going up. But I completely agree with you. I would have to incorporate a portfolio management, especially if there's like an alpha model. Thank you.
Yeah, thanks guys. I'm actually gonna hop off here. Thanks for listening to my presentation, and I hope you guys have a good rest of your day.
Thanks, Colton. Does anybody else have anything they want to add? Maybe some goals that you see yourself for, in your journey in quantitative finance? Any projects you're working on, something you want to work on?
So, sorry, I'm muting myself. This is Eugene Lights, bookie trader. So I've been on QuantConnect for about a year, a little more than a year, and I was going back and forth between Contopia and QuantConnect. My goal was to start trading in a quantitative manner rather than the day trader pick a strategy, and you're more of a discretionary trader. So beginning of the year, I was doing great. I think what led me on this goal I was doing great, and I foresaw the crash. So I started shorting the market in January, and I was up a lot. And I thought I was going to ride it all the way into the elections, thinking that the market would slowly go down into the end of the elections. But the market reversed, and I didn't believe it, so I lost all of my gains. And then I said, okay, this is several times you've blown up account. So, but I've made more than I've lost. So, that's the reason I'm still in this. But so now dedicated, I'm going to only trade quantitatively. And in August, I launched my first, and I decided to also get out of the stock market, focus on cryptocurrency. That's one of the reasons I wanted to pick QuantConnect, because they're the only platform I saw that had great or something out there with Coinbase Pro or Bitfinex. So launched it, just put something out there like the previous contributor said, that the only way you're going to learn is actually putting money out there. And there's a lot of things I've learned already between the connecting to Coinbase and some of the maintenance aspects of the quant strategy. So right now, my goal, I'm enrolled in the Udacity AI machine learning course. Just finished my first project. It's about a 6-month course, so I've been in there for 2 weeks. And 2021, take 2 courses, Udacity, and then there's another one, I believe, out there, the quantitative trading. There's an extra certificate and program. That's a few $1,000s, but I think I'll take it after I believe my programming skills are better. That's one thing. I was trading in VBA. So just before I'm in my current job, I was working for Wells Fargo on the contingency credit desk and supporting the quants. And so, they still use Excel and some of their other in-house programs to trade. They don't use Python. Python is more data analytics, but Excel and VBA, everything's built upon years and years of VBA. So I was heavy into VBA, so now I'm going back into Python, and I did some, my first live algorithm was in C#. But looking at C# and looking at that, JavaScript, because that's also some of the dApps that we're looking into, but focusing really on Python, because there's just a library in the strategies. If you look in the strategies, most of the strategies in Python. So those are my goals. Just wanted to share that with anybody. Yeah, it's been awesome. So I'm taking some time off of work right now to come to this meetup. Hopefully I'll meet up as much, many times. I learn a lot just by seeing and, watching other people, what they're interested in and what they're building. And then, it connects with my ideas. May take a piece here, a piece there, and I think that's how people will learn and grow. Thank you.
Awesome experiences. It's really amazing. I feel like it's something about when you win a big prediction, like predicting the market crash, you get biased towards that outcome happening. I did exactly the same thing. I predicted the market crashing in February, and then predicted it would keep crashing all the way through the rebound and lost everything that I had made in that huge crash. So I really think there's some sort of bias to it. It's something we could program.
I think Paul Tudor Jones said he's out and he started doing crypto, and that was like the trigger. I was like, okay, let me go back to this crypto. So that's been working out. It makes sense. And there's a huge shift in the institutional space now to get into crypto. And so that's one, I've seen now, one of the interesting things when I was at Wells Fargo in the operations section, there was a sales trader who was trading, or not trading, but trying to get people to get into the business. But now it's just a different time. So that's one reason why I think, and I think the only way you can really trade crypto or Forex that trades 24 hours is if you do something that it's within a quant flow. So.
Interesting. Have you seen the it's cryptocurrency trading with QuantConnect on Udemy?
Yes, I took his course, and that was why I got into C#. And then from there, I've gone into other things, and so that's why I'm trying to. I'm in Japan right now too, so that's the thing right now. It's the middle of the day, so it allows me access to markets that a U.S. trader can't access, on particularly the derivatives. So I can go into, say, Bitfinex and trade derivatives. So that's another thing I'm going to try to. I'm really interested in derivatives, especially since it's coming off of the contingency credit desk. It's all we traded was. It was a derivative of a derivative, so on the operation side.
Awesome. Thank you.
Anybody else have similar experiences or similar interests?
Just one last note too. So this is awesome. So the boot camp, 14 days, is suggestion. So what I'm doing right now is every single day I'm trying to knock out one of the sessions. As you get faster every time you go. So I'm about 1 month into it, and so I'm trying to do it for 90 days, every single day, knock out one session of the boot camp. So over a course of a month, you've done at least twice, two, and that will help you in especially if you're not a programmer, is build some of those muscle memory actions. So that's helped out a lot too, by the way. So the boot camp. So look forward to some of the algorithm framework that you're going to hopefully launch in the future on the boot camp.
Thank you. Good to know. I'm glad it's been helping out.
Anybody else want to give their past experiences or short introduction of you as a trader or how you got into this field?
Yeah. I don't have lots of trading experiences. I'm a student in Maryland, and before QuantConnect, it was all very manual on IB. And now I'm doing Python. My recent interest is on options, because QuantConnect can provide this excellent platform for option back testing. Well, yeah, it's slow, very slow, Sometimes it take one day for a very simple spread backtesting, but it works. Cool. And so recently, since you mentioned the crash protection in earlier discussion, and that's something I'm looking into right now. I think I'm also a big follower of that Black Swan author. So I'm trying to just basically try my best to kind of replicate their strategy. I don't know if I did that or not, but just try to follow maybe 50% of what they did. So it's crash protection using options, put essentially. And lots of people don't like it, I know, because they think it's just paying money and waiting for one opportunity every maybe 10 years, every 1 decade, or maybe 2, because the strategy Black Swan author and also his founder Universal did. It's like they I think they can protect like slow crash and kind of slow, like 5% off, like 10% off a market down. Their strategy won't work for that kind of slow, that kind of scenario, but their strategy will work if the crash is very big and fast, like 25% off or like 30% off, like this year. I mean, COVID-19, February and March, about 30% off and very fast. And then their strategy kind of work, very working. It was very working. So what they did, so that's also something I'm trying on QuantConnect. It's essentially 2 options. It's back ratio. Buying, essentially setting put options on delta something like -40. So you get some money, right? You get some premium, collect some premium. Then you buy lots of put options at delta -0.05. Yeah, okay. So it's like a really far out of money put options, but you buy a lot using the premium you collected from kind of close to at the money put option. So by doing so, it's really onto crash, like big crash protection. And if that really happens, like -30 thing happens, then your far out of money put option will be like basically skyrocket, right? I mean, you get a lot of money back, and then just clean them up and you collect all the money. And the return is, I just did some initial testing. The return is crazy. I'll say that. Yeah, it is. I mean, and according to news media, Universal Fund, they got like 400% return. Well, I know that their strategy probably is more complicated than what I said. So I think the thing I just back tested is about 50% of what they did, because they're saying I think they employed a special option pricing model, not BS, not the ones provided currently in QuantConnect platform. They have their own stuff, but kind of similar. Then this is something very interesting, like real Black Swan protection. And now I'm not just so I'm right now just doing this manually because doing the option stuff, live trading on QuantConnect requires some IB data feeds, and also need to handle the assignment event. Quite complicated. And I kind of have a worry that I may not be able to code this well. So I just, yeah, that's all on my end. That's something I'm interested in, kind of related to what you mentioned earlier in the discussion. Crash protection, big crash protection. If you have any better ideas, better strategy, we can discuss. Yeah, that's all.
That's really awesome. Have you seen the idea streams video on this? It was number 4 or 5, I think.
No. Yeah, I can check them out later.
I can link it for you in the chat real quick. Give me 1 second.
Thank you.
It's definitely one of the hardest strategies. Yeah, there's a lot going on when you trade options. But yeah, I would recommend following the example Jack recorded. Excuse my son.
No problem.
Jared, would it be tail risk hedging, or which one do you think?
Yes, that risk hedging. Yeah.
Okay.
Oh, okay. Yeah, that's something quite cool. And so in the end, the argument becomes, right, we don't care about like normal days trading, like SPY return. That's okay. I mean, that's okay, but we can use that kind of return to buy the protection and hoping one day we get, huge returns, like a lottery returns. Then that return across 1 decade actually is higher than SPY alone. They are like waiting for the end of the world. That kind of mentality. But it's interesting. Yeah.
Yeah, it was the conclusion in the research that Jack did anyway was that it performs just as well. It can beat the benchmark on an adjusted basis, and yeah, it really came down to a few major events, as you expect.
Yeah. Oh, thanks for the link. I will check it out. Thank you. If I get something interesting, I will probably share in the forum. Thanks.
Does anybody else have anything they want to share? Well, I think that if we are all wrapped up, if anybody wants to share, here's your last go if you would like to share something with the group.
Sure. I just want a follow-up question. So the tail risk returns, did anybody work with the bet size and looking at the code here? It's more 100%. I believe it's 100%. But did you work with varying bet sizes?
Yeah, so that's kind of the it'll beat the market, but it depends. So play with the strategy, the parameters and such as you like, and you can see the sensitivity of whether or not hedging will beat the market will depend a lot on the percentage you put into insurance and when you execute that insurance, like when you cash it in.
Alrighty, I think if nobody else wants to share anything, that will conclude our meetup. for this month. Like I said, these are usually on the last Thursdays of the month. However, next month, Thursday is Christmas Eve. So I think like this month, we will be bumping it forward. So just watch out for that. We post about it on our social medias, as well as I'll post in the community forum when we schedule the next one. But other than that, for everybody who celebrates it, happy Thanksgiving next week. Thank you guys so much for joining us. Really appreciate you guys sharing and creating this community together. So you guys have a great rest of your night and a great weekend.
Thank you, Derek and Colton. Thank you, guys.
It was a pleasure presenting. That was awesome.
Thank you. Appreciate it. Bye.